So we are now looking at financial management accounting or financial accounting, so to speak. This is actually one of the easiest courses that you can ever go for. And in accounting, we consider a number of items where especially we look at the double entry system, then getting down to the users of financial accounting. Who are those users? And then getting down to the preparation of ledger accounts or the final accounts. All right. So here we are now getting down to the financial information for decision making, the structure of the unit. So we look at what is accounting. Of course, these are basics that we can look at. What is account? These are just the basics that we can look at. Then look at the definition of financial accounting, just a classification, and also the recording of transactions in monetary terms of any entity in the accordance with the established concepts or the principles of accounting standards and legal requirements and their presentation. And then getting down to the purpose of accounting, what assets. Of course, we'll get into details of what assets are in accounting, what are the liabilities in accounting, and just about a number of other items that we need to look at. All right. So we got the purpose of accounting. Accounting information is required for a variety of reasons, such as the fulfillment of legal requirements. We also look at to assist managers to plan, control, and make decisions. Then account information is of an interest not only to the entity and business, but also to other users. Of course, we are going to look at the users of financial accounting. There are a number of users of financial accounting that we can actually look at. The first one, the users, we talk about the government is one of the, okay, so getting down to the users, the first one, we are talking about the government is one of the users of financial accounting. So the government, they need to know if you are doing fine as a firm, so that they'll be able to tell or determine the taxation they're going to charge on you. The suppliers are other users of financial accounting. So suppliers need to know if you are doing fine, so that they know if you are going to continue supplying goods on credit for you. The customers need to know the financial statements of the company, so that they know if they can continue buying from you. The other aspect on the customers. Then we also look at the aspect of the other one, where we look at the employees. These are the users of financial statements. An employee should know what is happening in an organization, so that they know if the company will continue operating, and especially on the aspect of job security, so that they know that they are going to still get their salary. Okay, then you talk about also the shareholders. The shareholders are also the users of accounting, so that you actually just determine if the company is doing fine, because the shareholders believe in the wealth maximization of the company. For them to maximize their wealth, they should know that the company is doing fine for their wealth maximization technique. All right, so this is just about what goes on as we are looking at the users of financial accounting. Okay, so we talk about the government, we talk about the suppliers. The suppliers are also called creditors. Okay, so suppliers or creditors, these are the users of financial accounting. They need to know what is going on so that they know that the company is doing fine. So we also look at the debtors. Debtors are also the users of financial accounting. All right. So this is just about what goes on as we look at the users of financial statements. Okay. So these are just about the ones to use as we're getting down to the users of financial statements. All right. Just give me a change. All right. So this is just about what goes on as we are looking at the users of financial statements. An employee is interested in the financial statements of a company. Why are you doing financial accounting? As an employee of an organization, you need to know the performance or how the company is doing so that you will know your job security. Are you going to get paid? Because the essence of a company, every organization, is to make profit. So if you are an employee, you're working for that organization, and an accountant tells you that you're not getting paid now, you should worry, you should know, because an accountant has told you that we are making losses. So we are not going to get paid this month end, or we'll delay a little bit to get paid. That's why you find that you're getting paid on the 60th of the other month, or not on the date that you get paid. You know that you get paid on 25th of every month, but you get paid on the 30th or maybe on the 1st of the other month. It's because the company is not actually doing fine. Okay, so this is just about what goes on as we're looking at financial accounting. All right, so in accounting, we look at the double entry system. So here we have what we call the double entry system. We have the double entry system. Okay, so in double entry system, we have the first one. Number one is debit. Okay, debit the receiver. So the receiver, you do a debit, so debit the receiver. That's number one. And then number two, credit the giver. Credit the giver. So this is just about the double entry system. Okay. So debit the receiver, credit the giver. All right. So this is on the debit aspect. And then this is on the credit aspect. Then it is accounting, anyone that is receiving, he has a debit. Anyone that is giving, he has a credit. This is on the purpose of accounting that we are actually looking at. All right, so please take note of this statement clearly and carefully so that you don't make mistakes as we getting down to the financial accounting perspective. Even when preparing the ledger accounts, please, ledger accounts are accounts that we talk about. They are based on the double entry system, where we look at the debiting and the credit. Okay, so that is on aspect of the ledger accounts. All right, so we can now get down to the preparation of final accounts. So here, first of all, we look at the trial balance. So when we have the trial balance, okay, so trial balance checks the accuracy of double entry system. So trial balance, which one we simply say checks accuracy, okay, of double entry system. So this one checks the accuracy of the double entry system. This is on the aspect of the trial balance. Okay. So now under this trial balance, we actually look at the posting of the entries, where we are looking at debiting and crediting. This is about the posting of entries. We are looking at the debits and the credits. Okay. Now, we also look at the other aspect, which is called the income statement. So we have the trial balance, which is checks the accuracy of double entry system. Then we're getting down to the income statement. So income statement. This one is also called the trading profit and loss account. So on this one, we are talking about trading profit. Income statement is also called the trading profit and loss account. So trading profit and loss account. Okay. And loss account. So this is just the aspect of the income statement. Then we have the third part of this, okay, on the financial accounting aspect. We are looking at the balance sheet. So under the balance sheet, this balance sheet actually looks at the financial position. It's also called the financial position of the business. So you have this one as financial position, okay, of the business. So this is about the balance sheet. So please take note of these parameters that we're looking at right about now. We are getting down to the three. The trial balance checks the accuracy of double entry system. Income statement, this one also look at the financial performance of the business. So this is on financial performance. So this one looks at the financial performance of the business in terms of how much profit the company has made and the expenses incurred during the accounting period. This is on the income statement. So these are the three statements that we are going to look at. First of all, the trial balance, okay, and getting down to the income statement, okay, then getting down to the other one, which is the balance sheet, which looks at the financial position of the business in terms of the profit making of the business and other parameters that we can actually look at. All right, so now getting down to the example that we can look at on the ledger accounts and the other things that we can look at, please. We have a question here where we look at the preparation of accounting. Then we'll get down to the solution. Okay, this is on how this one will be. All right, so now we get down, getting down to the question here. There's this question that says Daku started a new business on 1st January 2022, which is last year. He registered a company called Ndaku Limited. The following transactions took place during his first month in business. So on 1st January 2022, the company commenced business with a 10,000 kwacha in cash that was paid in by Mr. Ndaku as a share capital. So you have to just look at this and then we see what goes on. Okay, so the Ndaku started a new business on the 1st January 2022. He registered a company called Ndaku Limited. The following transactions took place during his first month in business. Okay, on his so on the 1st January 2022, the company commenced business with 10,000 in cash that was paid in by Ndaku as a share capital. On the 2nd January 2022, the company paid 8,000 of cash into his business bank account. So those are the transactions. So each account was receiving and which account was actually giving. So that is just about what goes on. On 10th January 2022, the company bought a motorbike on credit from the Honda Motors Limited for 3,000 kwacha. And on 11th January 2022, the company rented shop premises for 3,000 okay, and then was paid first immediately by check. So we have a rent account on that one. Then, of course, on the 18th January 2022, the company purchased goods on credit from the Roy Limited for 4,000. On the 20th January, the company paid shop expenses amounting to 1,500 kwacha by check. Okay, so that is the paid shop expenses amounting to that amount. Then on 21st January, the company sold goods on Scott amount to 3,000. Then on 25th January, the company settled Honda Motors Limited account by check. On 29th January, the company received a check from Scott and paid for 2,000. This check was paid immediately into the bank. On 29th January, the company sent a check to Roy for that 500 kwacha. On 31st January, the goods costing that amount was purchased from the Roy, and cash sales was actually 2,000. Then he entered the above transaction appropriate ledger account, balance of accounts at 31st January 2022, and bring down the balances at that date. Extracted trial balance. Okay, at the 1st January 2022. So this is just about what this question is all about. So please take note of whatever is going on. Prepare a profit and loss account for the amount of for the month of January 2022, and prepare a statement of financial position for the 1st January 2022. Okay, so this is just what goes on. So what needs to happen here is we need to start preparing for the, so here we look at which one was receiving and which one was actually giving out. So we go back a little bit. We see to read that we are getting down. So 1st January, the company commenced business with a 10,000 kwacha in cash. Okay, so a 10,000 kwacha is in cash. And then we need to now analyze or check and make sure that everything else is in order. So commence business with 10,000 kwacha in cash. So we have to make sure we do a double entry system. So you commence on 1st January 2022, company commenced business with 10,000 kwacha in cash. That was paid in by Mr. Ndaku as a share capital. So from here, what are the double entry system? You debit the receiver credit the giver. Okay, so meaning that here on this aspect, we are going to say our capital account was, okay, so our capital account from here, we can check the capital account as we look at the solution, the capital account, and then we look at the other one. Okay. So we are supposed to get the capital account, and then we get to the other one. Okay, so the capital account, and then we get to the other one. Then depending on what we have here. Okay, so we have this one. Okay, so we have this one here where we are going to have now the cash, so meaning that the 10,000 kwacha is here on the double entry system. Okay. So we have on the cash account, the cash was receiving. Okay, so the cash was receiving, and then the other one was actually, so from here, we are looking at the cash was receiving, and then the capital was giving out. So it is on the aspect of the double entry system. So the cash was receiving, so from here, let's go back to the question again. So here we are talking about the cash was actually on 1st January 2022, the company, okay, so this means, so Duke started business in January, we received the okay, so on 1st January 2022, the company commenced business with 10,000 in cash that was paid in by Mr. Anzak as a share capital. So the capital was, the cash was receiving, the capital was giving away. Okay. So this is why we have this kind of problem. So here we have the cash and the capital account. So this is what happened here. So they're trying to say capital and the cash. Cash was, capital was it? With money as capital was going away, and it was in form of cash. So this is on the debit. This was in form of the credit. This was in form of the debit. This was in form of the credit. Okay, so this is just about what is going on. Okay. Okay, I'm sure we're together. So you have to look at this. So you have to enter system in the debit and credit. Even here on the debit and credit, you have to find what is going on. And then we have this one here, 10,000 on cash and 10,000 on the other one. Okay, so this is on the up on the entry system. Then we go for the other one. The other one is on the second one. So this one is done. On the second one, couple pays 8,000 cash of the cash into the bank account. So you check which one is receiving as a debit and which one is it actually giving. Which one is receiving and which one is it giving. Okay, so meaning we can see that here bank account 8,000 cash, and then we have the other one receiving. Okay, so on January 20, the company paid 8,000 kwacha of the cash into the business bank account. So this is just about what is going on. So we have which one is receiving and which one is giving out. This is on the basis of the double entry system. So we have this one on the bank account. So this is on the double entry system. So this is on the credit, which is on giving away, and the debit. And then here also, this is on it, the debit, and then this is on the credit. So this is on the debit, and this is on the credit. Even here, this is on the debit, and this is on the credit. This is on the debit, and this is on the credit. These are called T accounts. So T accounts are the ones we're talking about. This is on the debit, and this is on the credit. This is on the debit, and then this is on the credit. So these are only the T accounts. So from each of these T accounts that we have, we are able to check through and identify which ones are actually coming through for whatever it is that we need. Okay, so here they bought a motorbike using from this one on credit motors from this company. So motorbike was receiving and the Honda was actually giving out. So on the 10th January 2022, the company bought a motorbike on credit from Honda Limited for that amount. So we are supposed to look at these two compositions as we getting down to anything else that we are supposed to do. All right, so this is just about what this is going on. Then the Honda Motors, and then the other one that I've actually looked at. Please take note of anything else that we are doing. And this is just what goes on. Okay, so here, with the double entry system, we bought a motorbike. Motorbike is gaining, and the Honda Motors is actually losing out. So on the losing side or giving away. So this is just about why we are looking at this way. So what is giving away? It is a credit. So motorbike. So motorbike came from the motorbike came from Honda, which is 300,000 kwacha. So they bought from this the Honda Motors. So motorbike was, so here the motorbike, the debit was again. Then here the Honda Motors is on the credit, was giving away. So this is just about what goes on as we look at this one. Then also getting down to the Roy Limited. Roy Limited, you need to understand what transaction was there. Okay, on the Roy Limited. So this one is gone. So here on the Roy Limited, they are saying the company purchased goods on credit from Roy. These are goods that they purchased, okay, from the Roy company, which was about 4,000 kwacha. So meaning that as we get to the information given in this question for the Roy, 4,000 kwacha was purchased. Okay, so purchases of 4,000. So the first one was purchases of 4,000. That came from Roy. So purchases was gaining, which is a 4,000. And then getting down to the other item on this one. Then on the rest, remember the goods sold on credit to Scott company for 3,000 kwacha on the sales aspect. So the sales aspect was the 3,000. So sales was 3,000 kwacha. So Scott, we sold. So we are giving away, because we are selling, we are giving away 3,000 to Scott, meaning that Scott received, because we sold to Scott, Scott received the goods of 3,000. So that's why we have a debit here. We'll do as much as possible, because the double entry system for basis of accounting depends on the ledger books, the ledger accounts that we need to go for. As you understand this kind of course thoroughly, please take note. You just really need to understand the basics of accounting that can come in a number of ways that you need to know. Please take time to understand the concepts of accounting. Okay, so we have the other one where we are looking at the other question, okay, to do with on 29th October. So here we have they settled the Honda by check. So on 25th we settled the Honda motors by check. So we paid by bank. Okay, how much? The Honda, for Honda we actually a 3,000, but we bought from Honda Limited on credit. So we now had to settle down the amount or the bill for the amount of the Honda we got. All right, so we are getting down to this one. So we sorted out Honda. So Honda was sorted out that amount by check. So Honda was sorted out. So this account was closed. So this is why this is the reason why this account was actually closed, because we had to settle down the Honda account. So this one was closed. Then we're getting down to the other parameters or other issues that we need to look at. Okay, so all these are sorted out. The company received the check from Scott for 2,000. This check was paid immediately into the bank. We received the check from Scott. What did we do to Scott? Scott, we sold to him on credit because he's our customer. He's a person we sold to. All right, so you just need to take note of that. Scott, we sold to Scott some items, okay, that were worthy a number of amount that we need to look at. Okay, so here we actually sold items to Scott. From here we can see to Scott we sold a 3,000, but we only received a 2,000 from him. Okay, so Scott for 2,000, but we only received that. So now we need to actually check out what goes on, what was actually there. So Scott, we received a 2,000, meaning he was only owing us a 1,000 question. So from here, there's need for us to now do as we can look at a question. The question was requiring us to do the preparation of the entries. You debit what is receiving, credit what is giving away. And then you have to also look at now the aspect of the trial balance. Okay, so the trial balance checks the accuracy of a double entry system. So you just have to balancing of the account. There's need for us to Now get the figures from the balancing figures from here. The closing figures, these are the ones we get in the trial balance. We get the closing figures. We also get this as a closing figure. We get a closing figure for each of them. We get a closing figure. We get a closing figure. Okay, as we get down to the business concerning the balancing off. So we now get down to the trial balance. So trial balance is this. In Cook trial balance, we just get cash was 4,000, which was on debit. The bank was on debit, and this is an asset. Okay, all assets have a debit balance. So this is an asset. Should have a debit balance. Also, this one is an asset. You should have a debit balance. So all assets have debit balances. Then this is the capital. It has a credit balance. So capital has a credit balance. Creditor has a credit balance. Purchases as this one has a debit balance. Motorbike is an asset. It has a debit balance. So here we're talking about this one as an asset. Sales as a credit balance. Debtors are this one, these ones, they have a debit balance. So this is just about what goes on as we look at this given problem. All right, so we have no other option but to go for anything else that we are looking at, or the aspect of the debits and credits that we look at. Unless there are any questions so far, please, for those who are behind, ask questions where you can. Okay, so an asset are items that bring economic benefits to a business. So when you talk about assets, what are assets in accounting? Assets, we're simply saying these are items. So these are items that bring economic benefits to the business. So these ones, they bring economic benefits. Okay, to the business. These are called assets. Okay, then also our liabilities. So we have liabilities. So these are items that take away economic benefits of the business. So items that take away, these items that take away economic benefits from the business. Okay, so this is the ones we look at as liabilities. So please take note of these distinctions. Of course, here we have current assets and fixed assets of the business. So assets are of two types. Okay, so assets are of two types. We have current assets. So the first one, we have current assets. So these are assets to be used in the business for less than a year. So these assets for less than a year are what we call current assets. So we have the stock. We also have debtors. So this is another component of current assets. So stock, we have debtors, we have a prepayment, then we have cash at bank is also a current asset. So cash at bank. And then we have also the last one is cash in hand. Cash in hand. So these are the assets that we need on the current basis for current assets. Of course, we have also the fixed assets. Okay, as we will get into details of these assets, the fixed assets. These are assets to be used in the business for more than a year. So under the fixed assets, we have land is one of the fixed assets. Then we have the buildings also is one of the second component of the fixed assets. Then we have fixtures. Okay, back we have plant and machinery, plant and equipment. Okay, so we have this one. When you have fixtures, so we have the fixtures, and then we have the motor vehicles. Motor vehicles. So these are the fixed assets that we have, all right, on the aspect of assets. So land is one of the fixed assets that can be there in business. Assets are items that bring economic benefits to the business. Please take note of that. And then, of course, we have two types. We have the current assets. We have also the fixed assets. Okay. Then we also have the fixed assets, which are the land, the buildings, the plant and equipment, the fixtures and fittings. Okay, so fixtures and fittings is also another part of assets, which are fixed assets. The motor vehicles. So this is just about what goes on as we look at the aspect of assets that are used in the business. All right. Then here we have liabilities. Of course, when we talk about liabilities, we are simply saying these are items that take away economic benefits from the business. So liabilities, we are simply saying these are items, okay, that take away. So these ones, they take away, okay, economic benefits from the business. So economic benefits okay, from the business are what we call liabilities. So, of course, here we have current liabilities. So take note of these two current liabilities. What is actually taking away the benefits from the business are what we call liabilities. So we have the current liabilities, and then, so here we have trade payables. So it's an example. So trade payables. These payables are also called creditors. These are also called creditors on a trade payables. We have also bank overdraft. So a bank overdraft. Then we have also an accrual. Accrual is also a liability. Even taxation is also a liability that we need to actually look at. Then we have long-term liabilities. Long-term liabilities. Under this one, under long-term liabilities, we have a loan is a long-term liability. That's the major one as we look at these long-term liabilities. So items that take away economic benefits from the business are called liabilities. So we can have a long-term liabilities and the current liabilities that we need to go for. So please take note of these two liabilities that we have. Okay, so be mindful of how these two operate. Okay, so now getting down to the question that we have. So I will talk about assets, which is on the current base of assets, and then the fixed assets. Then talk about the liabilities on the current liabilities and the long-term liabilities. These are the two liabilities that we have. So we can now get down to the other parameter where we now look at the question. So here, this is about our assets, all assets and liabilities, because I mentioned here that all assets and liabilities and expenses are a debit balance. All assets, so all assets and expenses. So assets and expenses are debit balance. So all assets and expenses are a debit balance. So this is what we have. Then all liabilities. So all liabilities and income. So all liabilities and income are credit balance. So this is about what goes on. All assets and expenses are a debit balance. Then on the second aspect here, so all liabilities and income have a credit balance. So you're supposed to know which ones have a credit balance and which ones have a debit what? Balance. So this is just about what goes on as we look at this kind of accounting. We are not supposed to finish this course in a day. You need to understand expenses are items that take away benefits from the business. Okay, so we're talking about expenses. Okay, what are expenses? So expenses are items that take away. Okay, so that take away economic benefits from a business. Economic benefits. Okay. From business. These are what we call expenses. So they take away economic benefits from the business. All right. So e.g., we can talk about salaries and wages. Salaries and wages. What other expense can you talk about? Insurance, an expense. So we have insurance. Then we have rent, is also an expense. We have a lot of other expenses here. Depreciation is an expense. All right. So all these are expenses because they take away the economic benefit from the business. So depreciation. Then we're talking about a number of them. Okay. Okay. Postage and stationery. It's an expense. So postage is an expense. Postage and stationery. These are what we call expenses. All right. So liabilities, we can talk about accruals and other things like the bank overdraft issues on here, trade creditors, bank overdraft, accruals, taxation. These are the liabilities that we actually look at. All right. So this is just about what you need to know as you are getting down to these expenses. Now, we can go back a little bit to the problem. So we have cash is an asset because it will give you a benefit. So it's our debit balance, like I mentioned. Anything else that has the cash and other items, they bring economic benefits to a business, and the debit balance. Creditors, they have a credit balance. So this is just about what goes on as we look at these two parameters. All right, so this is what goes on, please. Okay, so you really need to understand the aspects of these accounting treatment that we need to go for. Okay, all right then. So we now get to the other agenda here, where we now say we have this trial balance. Trial balance checks the accuracy of double entry system and should reconcile. So if you add these, the cash was 4,000, the bank was 6,500, capital was 10,000, the creditors was 6,500, the purchases was 7,000, motorbike we bought at 3,000 on the debit side because it's an asset. The sales we are giving away is a credit. Anything else that we are giving away is a credit. The debtors is a debit because it's an asset. So we have the total of these ones. All right. So this is just about what goes on as we are looking at this kind of a problem. Then we getting down to the other one. So here, this is about what we have. Then we are getting down to the Ndaku profit and loss account. So Ndaku profit and loss account for the month of January 2022. Sales is 5,000 coming from whatever is that we have here. The 5,000 is coming from there. Sales, so this is on the credit aspect. This is on the debit aspect. This is on adjustment. Okay, so adjustment. Then we find our sales. Then opening stock is a stock that the business would start, they can start with. and then which is opening stock was 0. The purchases was 7,000. You add these two, and you are getting the total stock, which is this one, less the closing stock of 0. You are getting the cost of sales at 7,000. From there, the gross profit is giving us a gross profit or loss, because it's negative, so gross profit or loss. So that one is the negative, so meaning that we have a 2,000. This is only the Ndako profit and loss account for the month of January 2022. This is just the format. I'll give you the format just about now on how you're getting down to preparation of the profit and loss account. Then you're getting down to the other one, the Ndako balance sheet as at 31st January 2022. So you got the fixed assets, the cost, the depreciation, and the net book value. So this one is called net book value. So we have the net book value, which is on the NBV. So motorbike is a fixed asset we bought. It's an asset that we bought, and it was at 3,000. There was no depreciation. So we have the net book value of 3,000. The current assets, we have the debtors of 1,000 from here. The trial balance, the debtors was 1,000. Then we had also the cash was 4,000. So cash was 4,000 from here. Then getting down to the other agenda here, we have the bank was 6,500. The total comes to, so this is total current assets. Total current assets. We are getting that. Then current liabilities of the creditors of that amount. So the subtraction over here, working capital is the difference between current assets minus the current liabilities, that is on the working capital. We're getting 5,000. The capital employed is that amount. Okay, so this is on the capital employed. So from here now, we can just, when you add these two, the addition of this plus this other one is 8,000. Then the financed by, then we have the capital of 10,000, add the net loss or profit, so giving us this, which is reconciling to these figures that we have. So this is on the closing capital. This is just about what we have as looking at the aspect of the preparation of the accounts, which is the final accounts, where it says prepare the final accounts. For these ones, we are looking at the semi-financial position of the company. And then, of course, getting down to the preparation of the profit and loss account for this company, we have this one. So on the ledger accounts, looks at the double entry system where you need to debit and credit, or it is only the double entry system. All right then, so the recordings will be shared for those who may need to actually get to the recordings of whatever it is we're doing about right now. In accounting, we are going to share the recordings so that if you're behind, you'll be able to follow through. But of course, I are going to mention that in accounting, it's an aspect of the double entry system where we need to actually debit the receiver and credit the giver. All right, so we actually now getting down to when you look at the income statement format, okay, income statement, it's written for the year ended. So this is for the year ended. So the year ended. An example is the year ended 31st December 2022. So we have the format here where we simply say sales is the first aspect. If we have the sales, so sales, you record this is on the credit side, this is on the debit side, and this is on adjustment. Okay. So we are going to record here sales. You record on this one. Then we are going to have opening stock. So we have opening stock, the stock that you start the business with. Okay, so you record here from opening stock, then add the purchases, add what we call purchases. To add the purchases, we add this purchases, we can put it here. Then add the carriage inwards. So add carriage inwards. Carriage. Okay, so we have add the carriage in. We have this one. So we are going to have the total purchases. So here we have this figure is called total purchases. We have the total purchases. Then from here, we are getting down to less closing stock. So less closing. So less closing stock. In fact, before that, we can even say less purchase returns. So before this, we have what we call less purchase returns. Less purchase returns. Purchase returns. Okay, so you have this one. Then you are going to have net purchases. So on the continuation here. Okay, so we have this aspect on the format. So from here we have this. So we are going to have net purchases. So here we are going to have net purchases. So these are what we call net purchases, where we record here. Then from here, you can now say total stock. Total stock. You add here, you're going to have this figure here. Then less closing stock. Less closing stock. Okay, so let's our closing stock. We are going to have what we call the cost of sales. So cost of sales. Okay, so we're going to have the cost of sales. Then from here, we are going to have the net profit, the gross profit, that is gross profit. So on the gross profit, we record here. So now add other income, add other income. So the first aspect of income we have is discount received. Discount received. So that is on the aspect of other income. Then we have also decrease in provision for doubtful debts. Decrease in provision for doubtful debts. So decrease in provision So that's another income. So we have now the total income. So total income. This is the format of the income statement. Okay. Total income of that one. Please take note of anything else that is happening. So from here, we can now look at less expenses. Less expenses. So under expenses, we can now salaries. So on the salaries, that's an expense. Of course, it can be salary and wages. Then we can now rent is an expense. Of course, there we can have insurance is also an expense. So insurance is also an expense where we can put. We have other expenses. Okay, so exactly 1930, the class ends. So please, you need to exit, leave the link at 1930 because I'm going to use the same link for the other people who are doing the other course. This accounting is a very, very important course. We need to just come and do a little bit more, that we go deeper, because it's very wide but very interesting. We need to understand the principles of accounting. You don't necessarily just do things haphazardly. You really need to understand the cost thoroughly, please. So insurance, we have that one. Then we have depreciation. It's also an expense that we look at. Okay, so depreciation is an expense that we also look at. Then you have to look at the total expenses. So we have the total expenses. Okay, so you put there. Then you can have now the net profit. So net profit. So please, this is just about what goes on as we look at this financial accounting on the aspect. And of course, I mentioned about the users as we started, the users of accounting. The users are the government, is through ZRA. They should know if they're able to make a profit or not, so that they can actually deduct on the taxation, on the tax that they need to get from you. Suppliers or creditors, they are also users, so that they know, can somebody continue supplying goods on you on credit? Maybe you don't have the money, you cannot allow somebody to continue supplying on credit, goods on credit to you, especially that they're not sure about you making money. Customers or debtors are called customers. Employees, they need to find out if you're going to be getting paid. You can't get a job in a company where you know that they're not making any profit, because you may not be given your salary at the end of that period, at the end of the month. So this is the reason why you need. So shareholders, or these are called investors, they actually pump in funds in the business. So shareholders or investors, they actually pump in funds in the business. So they really need to know the financial capabilities of the business. All right, so that they know, can you invest in a company that is not doing fine? You can't buy shares in a company or invest your money in a company that is not doing fine. Okay, we also have the other user. We are talking about the public. The public, these are other users of financial information or financial statements, so that the public would know if you are doing fine as a company, then they'll be able to be in position to invest money in their business. So this is just about what we need. and then preparing the double entry system. On a double entry system, we are looking at the debit and the credit so that you know, okay, you debit the receiver and then credit the giver. This is just about on the double entry system. Just I'm trying to make a recap on whatever we've done so far. Then also trial balance checks the accuracy of double entry system. Then from here, we are looking at the financial statements. Of course, you have the income statement and the balance sheet, which is also called the financial position of the business. The income statement is called the trading profit and loss account, okay, or financial performance of the business. That is on the income statement, shows the, and then assets, these are items that bring economic benefits to the business. And of course, there are a number. Liabilities are items that take away economic benefits from the business. For the assets, we have the stock, the debtors, the prepayment, the bank, cash at bank, cash in hand. Fixed assets to be used in the business for more than a year, land, buildings, the plant and machinery, fixed and fittings, and motor vehicles or motorbikes. These form part of what we call the fixed assets. Liabilities, of course, your trade payables, the bank overdraft, and the other. Please, at this point, we are almost 1 minute away. Leave the group, leave the link, go through whatever we've discussed in financial accounting, because well, it is the same link that we shared with those guys who are doing another course called corporate finance. Please, you can leave the group, you can leave the link right now in this minute time, please, so that we can have another class using the same link for the other class. We'll build up a little bit on this financial accounting. Please have time to go through whatever we've discussed now. Thanks very much.
Thank you.